a qualified chartered accountant with more than 12 years of professional practice in taxation, bank audits, and project financing. She has done her certificate course in concurrent audit of bank and forensic accounting and fraud prevention of ICAI. She is partner in chartered accountant firm Dhanraj Nogaja and Associates. Sorry for disturbance. She is partner in chartered accounting firm Dhanraj Nogaja and Associates, providing business solutions and management consultancy in taxation and audit related services to more than 1,000 clients. She is honored with Idol of Maharashtra Puraskar by Sakar, a daily newspaper in Solapur. She is currently nominated on Career Counseling Committee of ICI and conducted various career counseling seminar at colleges and schools and institutes for students. She has conducted various talk shows with Radio 95 My FM of Solapur related to taxation, budgets, and financial affairs. While she was a chairman of Solapur branch of ICA, that branch has received Best Branch Award under her chairmanship in the year 2021 after 25 years. That is a really very great achievement by a woman. So nice. So with this brief introduction, we welcome CA Nilasha Nogaja. Please, the rise is yours.
Thank you so much, Susma ji, for the kind introduction. Good afternoon, all, and it's been pleasure to be a panelist for WOW series. Thank you so much. Thank you so much, Pinky ma'am, Shweta ma'am, and of course our dynamic chairman, Arpi Kabra sir, for giving this great opportunity on this platform to me. It's a platform, presently Arpi Kabra sir said that it's a platform created by WIRC to share technical knowledge, current updates, enhance our non-technical skills, and encourage women members of the region to express themselves confidently in the public forum. Like WOW series, all various new initiatives also are taken by under the Committee of Women and Young Members Empowerment Committee under the head of under the head of Pinky ma'am and Shweta ma'am. So I congratulate both of them and acknowledge their work towards CA fraternity. Thank you so much, ma'am. Before starting my presentation, I would like to say something about ICI, just for 1 minute. I feel really privileged to be a part of CA fraternity. Thank you so much, ICI, for making me a part of this profession. ICI has given so many forums, platforms, or platforms for professional development, networking, seminars for knowledge updating, various professional opportunities for growth and prosperity, new friends and professional colleagues with RRCs and national conferences and big mega events of ICI. And lastly, but most important, respect and dignity in the society. Thank you so much to our president, chairman of our region, CCM, RCM, constantly working under various committees of ICI to keep the standard of our profession so high in the society and nation. It's really add a great value to our profession. Thank you so much. ICI की अपनी एक अलग ही दुनिया है, which is different from our routine life, and it made our life so much interesting, challenging, and also rewarding. Right? I think all are agree with me. I love ICI so much. Now I take थोड़ा सा emotional हो गई. Now I would like to take opportunity to try my level best to give the justification to the topic I chosen, practical approach to financial statement. If somewhere I lack my knowledge, then I make my apology in advance. So we'll start with the presentation. See, we start. As per our Companies Act 2013, unless and until it is exempted by Accounting Standard 3 and Ind AS 7, all the companies are required to prepare set of financial statements for the specific period of time. For example, for the year or quarterly or for interim period, 6 monthly, to give the information to the user of financial statement regarding the financial flow of the information of the company. So which are these financial statements? Which are the financial statements? These are the balance sheet, income statement, profit and loss income statement, cash flow statement, state of change in equity, and notes to financial statement. So guys, cash flow statement is one of the most important integral part of financial statements. So we'll go to our slide. Now let's read, learn, and understand the cash flow statement. So my PPT is divided in 3 parts. First part, agenda, then analysis and key takeaways. See, agenda, I'm covering what is the cash flow statement, why to prepare cash flow statement, how it is categorized. In analysis, we'll see the parts of the cash flow statement, operating activities, investment activities, financing activities, and we'll do peer comparison with similar industries financial statement practically over here. Then the key takeaway points from my PPT. Now, let's start. What is a cash flow statement? Cash flow statement basically shows inflow and outflow of a company for a cash for a company for a specific accounting period. How cash flowing in the company, how cash is movement, how the cash is moving in the company. Cash flow statement is an important document that helps interested parties gain insight into all the transactions that go through the company. Who are the interested parties to the cash flow statement? Investors, credit analysts, or even company. Those who wants to invest in the company, they are the most interested parties for the analysis of the financial statement of the companies. What are the 3 parts? Cash inflow, that means generation of cash to the company, cash outflow, usage of cash or spending. And this gives us net cash flow, that is cash inflow minus cash outflow. Next. So why to prepare cash flow statement? So this question arises in our mind, why to prepare cash flow statement? Because we have profit and loss account statement and which gives us the profit figure of the company. Then why we have to prepare the cash flow statement? We have to prepare cash flow statement because cash flow statement is an important parameter to analysis the company. Generally, we focus on profit and loss account and balance sheet so much that we ignore the cash flow statement, which is the third most important aspect of the financial statement. From the investor's point of view, it tracks the flow of the cash from various sources throughout the year. Which are these sources? Cash flow from operating activity, cash flow from investing activity, and cash flow from financing activity, which helps us to know the liquidity of the company throughout the year for pure liquid cash. Actually, as per the SEBI guidelines and accounting standard 3 and Ind AS 7, every company has to, unless it is exempted, every company has to prepare cash flow statement for the interim period, for the quarterly, to help its analysis and investors to take timely decision. So we have to prepare cash flow statement for our investors to take the timely decisions. Mandatory requirement to prepare cash flow statements. To whom it is compulsory to make the cash flow statement? Financial statement of companies are prepared following the accounting standard prescribed in the Companies Act 2013. Companies Act 2013 also specify that if the accounting standards are not followed, then financial statement will not give true and fair view of accounts of the company, which is a quality of the financial statement. So we have to follow accounting standard, which is stated in our Companies Act 2013. Financial statements are defined in the Companies Act and includes cash flow statement prepared in accordance with the accounting standard 3. So nowadays, what happened? The business landscape is rapidly changing as new ways of conducting the business are emerging. Business are going on digital platform. As the business complexities are increased, existing accounting standard lack the provision to cater these changes. That is AS3. This gives rise to Indian accounting standard, popularly known as Ind AS 7. Ind AS. And in case of cash flow statement, it is Ind AS 7. Ind AS 7 are the Indian version of International Financial Reporting Standard, which are global standard governing the accounting aspects. So, to whom Ind AS 7 is applicable, which is regarding the disclosure of which is regarding the preparation of cash flow statement. To whom it is applicable? The companies which are listed on stock exchange in India or in the process of listing. Then companies with the net worth of 500 crore or more, or holding subsidiary, joint venture or associate companies that are required to follow Ind AS 7. Otherwise, remaining companies has to follow accounting standard uh, accounting standard 3 unless they are exempted from accounting standard 3. Then which companies are how to are exempted from accounting standard 3? Level 2, level 3, level 4 companies, small companies, dormant companies, government companies, they are exempted from the accounting stand applicability of accounting standard 3. And the companies which are listing in the stock exchange or in the process of listing in the stock exchange, and the companies having annual turnover of 250 crore and more, or net profit is having 50 crore or more, are applicable under accounting standard 3. They have to prepare cash flow statement as per requirement. And banking companies and insurance companies have to follow the guidelines of Reserve Bank of India and IRDA guidelines. They have to follow with Ind AS 7. They have to follow Ind AS 7 also, but with the guidelines of RBI and RDA Act. Ind AS 7 become applicable to company, then Ind AS 7 shall automatically be made applicable to all subsidiaries, holding companies, associated companies, and joint venture of that companies, irrespective of individual qualification of these companies, right? It's clear to whom it is applicable to prepare cash flow statement. Now, next. What is the need to prepare cash flow statement? Cash flow statement क्यों बनाना है हमको? Just we saw. In the recent year, there is a rise in corporate bankruptcy. Business goes bankrupt. Do they have profit? See, when we see the balance sheet, we saw the big amount of profit figure. But at the end, what we see? Business goes bankrupt because they have no liquidity at all. Because profit and loss can be manipulated by increasing sales, fake sales, but cash flow statement cannot be manipulated. That has led to increased interest in the examination of companies' liquidity as well as accurate prediction of future liquidity, current liquidity also and future liquidity also. Just by analyzing the cash flow statement, we can know the crux of the business, what's going in the business, where the company is investing its cash, what was going in the company. So we can analysis with the help of cash flow statement. There are different perspectives to see the cash flow statement of the company. For example, there are different views to see the cash flow statement of the company. If the company is stress making companies, if the company is stress making company, then analysis will see which point of view of the analyst will see the company's cash flow statement. He will see that whether company is able to pay its debt to the borrowers. Company is able in the position to pay its debt because it is a stress making company. It's not making a profit. And if we see or analysis the profit making company, then investor will check whether it is generating profit. There is increasing trend of profit, so we'll get the dividend from the company. So there are different views of the analysis to see the cash flow statement of different types of companies, stress making companies or profit making companies, right? Now, next slide. Yeah, it's Satyam scam 2009. Everyone knows this scam as Satyam is Satyam scam was happened in 2009. Satyam is a computer services IT based company providing consulting and information technology services to various sectors. India's fourth largest software and service firm. What does with this scam? How did this scam was happen? The CEO of the Satyam, Ramlinga Raju, he was involved in this scam totally with our audit firm PwC. PwC firm was also involved in this scam. Otherwise, it was not possible to do this. What they did, they inflated all the earnings, assets of the companies over the years, inflated revenues, incomes, and cash balances by more than $1 billion over 5 years. They did this. Using fictitious sale, forgot bank statements, and transfer all the assets of the company to their related party company, which is against our accounting standard. Satyam was able to scam its investor by showing inflated number of assets. It was 7,136 crore accounting fraud came in the picture in 2009. I just elaborate this fraud. What was wrong with this company? Just within few lines. What was this Satyam scam about? Satyam is a listed company which is listed in New York Stock Exchange, Bombay Stock Exchange, and also National Stock Exchange of India. It is about the corporate governance and fraudulent auditing practices fraud. The company misrepresents accounts both to the board, stock exchange, regulators, investors, and all other stakeholders very nicely. It was totally planned. Even basic facts such as revenues, operating profit, interest, liabilities, and cash balances are grossly inflated to show the company is in good health. Invoices, bills were created, fake invoices, totally fake invoices, and bills were created, and fake web-based 356 investment companies are created to divert the funds of Satyam between these companies through intercorporate deposits, investments, advances among them. The CEO has created number of fake bank account statements in order to inflate its balance sheet figure of cash, which does not exist at all, and created fake customer identities and fake invoices in order to inflate its revenue. This in turn would allow the company to easy to access the loan because the cash figure is inflated so much that company can raise external borrowings from out the sources of the company. So it creates the impression of good impression in the mind of investors, and which lead to increase in the share price of the Satyam. CEO went to create lots of fake employees accounts and withdraw the salaries on their behalf. He withdraw $3 million salary every month on behalf of the employee. See, $3 million every month for 5 years. He withdraw the salary on behalf of fake employees and diverted all the money to the real estate company, which is called Maitas, which is his brother's company. He diverted all the company's funds to the related party company. Nearly 1.04 billion in bank loans and cash that book showed was non-exist at all. When this scam was out, the share price fell to 11.50 rupees on that day as compared to height of 544 in 2008. See the price fall down from 544 in 2008 to 11.50 in 2009, and the index dropped 750 points due to the Satyam fraud, which threw the market into the turmoil. See, so it's very essential to make the financial statements, to check the financial statements carefully and see what the company is doing with the funds of the investors, where it is investing. Our auditors are involved in this scam, so this scam was happened. Now next slide. So simply we'll see how cash flow statement is categorized. Cash flow statement is categorized in three forms: cash flow from operating activities, It's a core principal activity of the business generation. It's core principal activity of the business from which revenue is generated. Second activity is cash flow from investing activity, where the company invests its fund for buying property, plant, equipment, or intangible assets, or also receiving interest or dividend. And third, cash flow from financing activities, where the company raises the funds for the business, or company pays the liabilities, or company pays the interest, company pays the dividend to its shareholder. Basically, three are the categories of the cash flow statement. We will see these categories in depth. Next, C. Cash flow from operating activities. Operating activities section focuses on business's main activity like selling, buying, merchandise, and services. It also includes sales, marketing expenses, manufacturing, technology upgradation expenses, resource, hiring, and others. I said earlier also, operating activity is a core business activity of the any company, and it revenue should be generated from this activity. So from if company is garment based company, then purchase of the garment and sale of the garment is the basic operating activity of the company. And if the company is a banking company or financial company, then lending the deposit, taking the deposit and lending to the borrowers is the core principal activity of the banking or financial company. So the operating activity depends upon the nature of the company or the industry. So it differs. It is not same for the all the companies or the companies or the it is differ for the or the companies or industries. Analysis of cash flow from operating activities helps in evaluating the efficiency of the company's core business operation. What is the core business operation of the company? We can see from the operating activities cash flow. Amount cash from the operation indicate the internal solvency level of the company and is regarded as the key indicator of the extent to which the operation of the enterprise have generated sufficient cash flow to maintain the operating capability of the enterprise. See, among these three activities, operating activities so important because its core business is depend upon the cash flow of operating activities. If the cash flow from operating activity is the positive, then only company can make the investment, company can make pay the dividend, company can repay the loan. So it's very important for a company to make the cash flow from operating activity be positive. So cash flow to maintain the operating capability of the enterprise, paying dividend, making new investments, and repaying loans without recourse to external source of financing. Next, cash flow from investing activities. Here, it is the second important activity of the cash flow statement. It reflects about the investing activities that company makes for gaining benefit at a later stage. If company has a positive cash flow from operating activities, then company can think about the investing. Company can think for the investment for gaining benefits in the future. Company can park its money in interest bearing securities. Company can invest in the equity shares of other companies. Company can buy land, property, plants, equipments, or intangible assets for future growth of the company. It depends upon the income from the positive income. If it is positive from cash flow from operating activity, company can take the decisions from the future perspectives. So if the company is service based company, then it invests its money in intangible assets, buying copyrights, patent, turning to its employees. If company wants to grow or expand its business, company increases its investment in own business also. If company wants to grow further, company can make investment in own business by purchasing land and property and equipment for its own business. Next, cash flow from financing activity. Cash flow from financing activity, it reflects activities about the financial transactions and real capital structure of the company. C. Cash flow from financing activity reflects us the real capital structure of the company, such as, see, what is the real capital structure of the company? How much company is borrowing money from outside or how much equity is with the company? That structure is known by the cash flow from financial activity. Or how much, such as what are the activities which are included in financial activity? Distributing dividend to its investors, borrowing debts and bonds, raising funds by short-term borrowing, buyback of equity shares, repaying loans and paying interest to the loans. These are some of the activities which are come under activities from financial activities. Cash flow from financial activities. I said earlier also, for banking, it is a cash flow from operating activities. And for any other company, it is cash flow from financing activities, such as borrowing loans or paying loans, giving interest to the borrower comes under the financial activities. But for the banking or financial institution, it is come under the operating activity. See, we'll take an example. Payment of dividend and interest. Payment of dividend and interest, it comes under the financial activity. It is a part of financial activity because we have to pay the dividend to the investors and we have to pay the interest to the borrower. Then receipt of dividend and interest come under the investing activities because we are investing in some companies. Then these companies are paying us dividend, then it comes under our investing activities. Or if you are receiving interest from the securities, then it also comes in our investing activities. These are the differences. Payment of dividend and interest comes under financial activity. Receipt of dividend and interest come under investing activity. It depends upon the nature of the company or industry. Here, next. See, we'll see the cash flow statement in short and in a simple way. There are three flows to the cash flow statement: net operating cash flow, net investing cash flow, net financing cash flow. For the net operating cash flow, flows come from cash collection of sales, or for if it is a service-based company, then professional receipts are coming to the company and the company is paying to its supplier, employees, interest and taxes, or companies paying on training of the employees. So here is the cash is coming, here the cash is going, and the net is net operating cash flow. Net operating cash flow from operating activities. Then second, net investing cash flow from proceeds from sale of fixed assets. If company sells its fixed assets, then all the proceeds or any scrap, then all the proceeds come under this investing cash flow. And if company acquire fixed assets, property, plant and equipment, then it company's cash is going out. The net of this is net investing cash flow. If company is receiving interest, then it comes under it comes here. And if company is receiving interest, company is receiving proceeds from sale of fixed assets, it's come here. If companies acquiring assets or companies purchasing plants, property and equipment, then here it comes here, and the net of the effect, it is net investing cash flow. Then third cash flow is net financing cash flow. Here company borrows loans or company issues equity, then it comes under this. And if company make repayment of loan, company pays interest, company pays dividend, then it comes here. The net of this is net financing cash flow. When we sum up these three cash flow, we get net cash flows. But this net cash flow is not reflected in balance sheet. Then what is reflected in balance sheet? We see in the next slide. Cash and cash equivalent at the end, which is reflected in the balance sheet. How we calculate cash and cash equivalent at the end? See, cash flow statement has three main heads. Right now we saw cash flow from operating activities, this much. Cash flow from investing activities, this much. Cash flow from financing activities, this much. So we'll get net increase or decrease in cash or cash equivalent, this much. See, it may be negative, it may be positive. Generally, cash flow from operating activities is positive, or cash flow from investing activity may be negative. It's good to be negative because it shows that company is investing somewhere, or cash flow from financing activity should be a negative because it shows that company is repaying is borrowing, company is paying dividend. If it is positive, then we think that company is raising loan from external sources. So it may be negative, it's good. It is negative, it is good. It is then we'll add cash and cash equivalent at the beginning, which is this figure comes from the last year's balance sheet. That is cash and cash equivalent at the beginning, and net figure we get cash and cash equivalent at the end. And this is figure is reflected in the balance sheet. Okay, clear? Now, what are the methods for calculation cash flow statements? There are two methods to calculate and prepare the cash flow statements from operating activities. These two methods are first the direct method and second is the indirect method. Direct method is most probably we recommend that we should prepare our cash flow by using direct method, but generally we prepare our cash flow by using indirect method. Direct method whereby major classes of cash. In direct method, we took gross cash receipts and we deduct gross cash payments from these three activities and we get the net cash flow from these three activities. We just take cash inflow from gross and we just deduct all cash outflow gross and we get the net cash flow. Very simple. But it is simple for the small entity, but it is very cumbersome and complex job for the big entity. And indirect method, what we do? In indirect method, what we do? We take the net profit and loss, which is available in income and expenditure statement. We take this net profit from this statement and we make the adjustments for non-cash transactions, that we are adding back all non-cash transactions such as depreciation or amortization, all non-cash transactions. We also make adjustment for working capital, say debtors receivables, creditors payables, we make add or less. And we also add or less all the items which are related to investing and financing activities before taxation and extraordinary item as per profit and loss of the enterprise. Clear? Now, see in short, this is given. Direct method, what we do? This method uses actual cash inflow and outflow from the operation. It takes gross cash collections and deduct gross outflow. It's more cumbersome, time consuming. See, this is the calculation statement approach. Cash sales, we take the cash sales, then add payment received from the customers, less payment made to vendors, and then less payment made for expenses and taxes. We get the net cash flow. And under indirect method, we just take what we does, because as per our AS, we follow accrual system of accounting and not the cash basis of accounting. And this method requires changing accrual accounting to cash basis. So it is easy to prepare, but still less time consuming than direct method. Companies usually use this method to prepare cash flow statement. Every company uses this, they prefer indirect method to prepare cash flow statement. See what we does, this is a ready-made figure which we taken from our profit and loss account, net income. Then we add back all depreciation and amortization or non-cash expenditure to this. Then we make add or less to the cash flow from operating activities or investing activities items. We make add or less, or we make also add or less all the changes in working capital. What are the changes? Debtors receivable or creditors payable. If they are pending, then we make add or less. Both the methods gives us same results. That's a super clear. Next. So here we come. Activities not forming part of cash flow statement. Which are the activities which are not forming a part of cash flow statement at all? See, there is a No change in the cash flow statement. These are the activities. Issue of bonus shares. Conversion of debentures into equity shares. Cash flow statement, no effect. Provision for gratuity and living encashments. We are following accrual system of accounting, so there will be no effect in our cash flow statement. All extraordinary items. Acquisition of enterprise by means of issue of equity shares. If we are making investment in other enterprise by acquisition of, by issue of our own equity shares, then it will not come under cash flow statement. Conversion of term loan into equity shares. If we are repaying our debts through issue of equity shares, then it will also not come under cash flow from cash flow statement. Reduction of capital under restructuring or reduction of capital by exchange of assets. We are reducing our capital, we are buybacking our shares by exchange of assets. We are giving through exchange of assets. So all these are the transactions are not taking part in the cash flow statement. Here, we'll go to next slide. What are the uses of cash flow statement? See, it is super clear that cash flow statement is integral part of financial statement, and it is very important to prepare cash flow statement, not only to prepare but to analysis the cash flow statement. And there are different views to analysis the cash flow statement from the company's point of view, from the investor's point of view, from the creditor's point of view. Everyone's objective is different for the cash flow statement, to analysis the cash flow statement. See, basically what financial health assessment. The cash flow statement provides insights into the company's financial health by detailing its ability to generate cash flow from operating activities. I already said that whether we can check that whether company can generate a good amount of cash flow from its operating activities, whether it is an increasing trend, whether company can capture the market or increasing its sales on yearly basis. We can take the average of sales of the, we can watch the sales activity of the company by making the comparison of 5 years or 10 years and assess the financial health of the company. Then liquidity analysis. So from the profit and loss account statement, we can see that company is increasing the profit, company is increasing the sales. But though we come to know that whether the sales are realizing in cash or not, whether the company has liquid cash or company is only increasing the sales and increasing the debtors receivable, it helps. So the liquidity analysis helps to assess the liquidity position of a business, showing how well it can meet its short-term obligation using available cash. Whether company's debtors are realizing or company is able to pay its creditor, company is able to pay its short-term borrowings, company is able to pay its interest. So we can analysis this from the liquidity analysis. We get it from its liquidity analysis. Then investor decision making. These two analyses are for company's point of view. Investors who are interested to invest in the company, what they see, investors use cash flow statement to evaluate the company's ability to generate the return, because they are investing in the company's share. So they will check the company's ability to generate the returns and sustain the operation, and which influencing investment decision. So if company is paying dividend, if company is increasing sales or its ability to pay the dividend to the investor, then investor will think that we should invest in the company. So it is from the investor's point of view. Then budgeting and planning. This is again from company's point of view. Company check that if there is a increasing trend in its sales, whether the sales company is increasing and we are realizing the profit in cash, then we can make future planning for the company. We can make investment, we can make planning for the taxation, we can allocate the resources of the company, we can buy property, plants and equipment for the company. So business utilize this cash flow statement for budgeting, planning, allowing them to forecast the future cash need and allocate the resources effectively. Next. There are lots of uses of cash flow statement from different point of view. Credit worthiness evaluation. So this is from the point of view of lenders and creditors. What they see? Use of cash flow information to judge company's ability to repay the debts. What the creditors and lenders say, check that whether the company's trend is company's paying its borrower timely interest or companies repaying with the terms of their repayment of the whether the company is paying the borrowers on timely basis interest and principal. Creditor will check whether the company is paying to the creditors on the timely basis without wasting the credit period. So they make the evaluation through the cash flow statement. Then valuation analysis. Valuation analysis is very important point of view. Analysis of cash flow from operating activities helps in making the valuation of company for a peer comparison with the same industries. See, valuation is the company's share value, which will help us to make the analysis of company share with the other company share. We can make the peer comparison with the same industry. I'm taking the examples of two companies next in my next slide. So we'll do the peer comparison of these shares and we'll do that. Then trend analysis. By highlighting the cash inflows and outflows, the statement aids in identifying increasing and decreasing trend of the business and inform the cash flow from the operating activities. See, by analyzing the trend of the company with respect to inflow and outflow, somewhere inflow is negative, somewhere inflow is positive, then we can analysis the trend of the company, what is decreasing or increasing, and we can analysis the company's cash flow. Then capital structure decision. See whether company is equity based company or company has lots of borrowing from external sources. So we can check it by debt equity ratio. Debt equity ratio shows us that if debt equity ratio of the company is more than 1, debt are more than equity, then we can say that company is standing on external borrowings. And if debt equity ratio is less, if suppose it's 0.7 or 0.8, then we can see that company is equity based company and it is standing on the stakeholder. So company can use the cash flow statement to make informed decision about the capital structure, balancing debt and equity to optimize the financial stability. I think from ideal point of view, debt equity ratio should be 1, not less or not more than 1. Dividend planning. It is again from the company's point of view. It assists dividend planning by indicating whether the company has sufficient cash to distribute among the shareholder without compromising its core operation activity. Company can make dividend planning for its investor. Then tax planning. Business can optimize tax planning by understanding the timing of cash flow, helping to manage tax liabilities more effectively. If company has increasing profit yearly, year by year, then company has to make also tax planning on the basis of trends going on. The next, sensitivity analysis. It's very important because this analysis is done in COVID situation also. How company reacts in terms of sales and output when there is uncertainties taking place due to change in key parameters. For example, change in demand. In COVID, there is a lot of change in demand of the companies, say companies output, unit, change in unit selling price, cost, and change in GST rate, interest rate, which helps the investors to take timely decision. These are the uses of cash flow statement. Now, next. See, this is the DMart's cash flow statement for 2 years. DMart is one of the 19th largest company of India. Supermart. See, I'm taking the pointer for that to reflect, to show you the figures. See, cash flow from operating activities of DMart on 2022 is 2064 crores in 2022. And what was in 2021? It was 1483 crores. There is a huge increase in the cash, huge increase in the profit. from as compared to 2021 to 22. But what we see, cash flow from operating activities. What is it? It is 1,375 in 21 and 1,372 in 2022. That means company's cash flow from operating activity is not increased as proportionate to profit increase in the last year. Then what's go wrong? Just analysis the DMART statement and we'll see the items in profit items of operating activities. See what was went wrong with this financial statement. What's happened? See here, there is not change in this non-cash items. Here, increase in trade payables. What was trade payables? 144. And here trade payables are 11.07. That means DMART had trade payable 144 in 2021, but here DMART has paid all its liabilities and only 11.07 crore liabilities remaining. So there is a huge gap between these figures. Then we'll check increase in trade receivables. So here trade receivables are 300 and here trade receivables are 494 crore. So there is a huge difference. There are so many trade receivables are pending. So it gives rise. Then what's the next point is inventory, right? There is sorry, it is not trade receivable, it is an inventory. Trade receivables are 23.31 and 24.03, but inventory, DMART's cash is stuck in the inventory, which was 300 in last year and it is 494 in this year. So the cash is stuck in inventory. So cash flow is 1,372 as compared to last year. It is not with proportionate to profit of the DMART. Now, cash flow from investing activity. See, it is 1,110 negative. So because DMART is investing and it is 1,289 this year 2022. What was wrong? See, I think DMART purchases its own land for its own store. So he's making he's going to purchase property, land, and equipment for his all the stores. So he's making huge investment from the future point of view. So DMART's investment is increasing. So there is a negative cash flow of 1,289 from net cash flow from investing activities because DMART is purchasing its own land and also we saw that DMART is having its own solar equipments also for electricity generation. So from the future point of view, DMART is making huge investment in own business. That's good sign. So it may be negative. That is a good sign. Then next, cash flow from financing activities, we are checking. This is 179.50 crores in last year and this is 179.24 crore this year. There is a no change. What we get net increase and decrease in cash and cash equivalent, that is 96.38 negative. How come it become negative? What was wrong with the DMART? Though we are getting say, a profit of 2,064 crores, but at the end, what we saw, DMART is having net increase or decrease in cash and cash equivalent is negative 96.38. It's not a good sign because it shows that DMART is not making his working capital management is poor. But we actually saw that DMART is making investment, but DMART has to make his working capital management. It has to improve its working capital management. Data should be realized early. So, or DMART stock is also, cash is also stuck in the stock of the DMART. So maybe due to poor working capital management, DMART is having a net increase or decrease in cash and cash equivalent negative. So here we take the cash and cash equivalent at the beginning of the year, that is 191.50 crores from the last year balance sheet. This is, and here we get the balance as per cash flow, that is 95.12 crores at the end, which is reflected in the balance sheet. See what are the profits of the DMart and what is the net cash flow in the balance sheet. There is a huge difference. Due to analysis of the cash flow statement carefully, we can analysis what's going in the company in detail. So clear Pinky ma'am? Hello. Okay, we'll go to our next slide. So here I am making the comparison of DMart with Trend Limited to Tata Consultancy Services Limited for the 10 years. Here is the 10 years figures of DMart. And here is the Trend Limited is Tata's company. So Chroma, Westside or Zudio, these three companies are also coming under the Trend Limited. So here we see the DMart's cash flow from operating activities. It is increasing. See, it is increasing from 13 to 22. It is 7,000 crores. We are taking the average of 10 years. It is increasing. Then cash flow from investing activity, it is negative till 17. Then it's positive. Then negative. I already told that DMart is investing so much in land and property and building. All the stores are stand on their own lands, and solar equipments are also purchasing for every store. So there is a huge investment in their own business, that is 11,640. See, cash from operating activities 7,000, cash from investing activities negative 11,640. And how come it is possible? DMart is borrowing its fund from external sources. See, cash flow from financing activity, it is positive. Positive, it means company is borrowing funds from external sources. So see these are positive, then negative. Here DMart has paid some its borrowings. Then again DMart has borrowed, paid, and here comes positive 4,687. It's not a good sign. It's positive. It is not a good sign. We have to pay the interest and we have to repay the loans. And so the net cash flow is 47.67 crore, though the operating activity cash flow is 7,000. We have to make deeper analysis for the DMart's net cash flow statement, because DMart is investing more in their property, land and building. But DMart is poor in making the working capital management. So it is getting net cash flow little poor, 47.67. It's not good sign. 47.67 crore at the end. It is the analysis of 10 years. Now we'll do the analysis of Trent Limited, Tata's company. Cash flow from operating activity. See the fluctuation. It is positive, negative, positive, and it's 989.95 crore. Somewhere it is negative, somewhere is positive, and there is no trend of increasing. Decreasing. Then cash flow from investing activities, it is negative. There is no trend at all. Somewhere a huge amount, somewhere a less amount. Ultimately, it is a negative 1,548. Then cash flow from financing activity is a positive. It has borrowed negative, positive, positive, then positive, negative, or at the end it is 1,365 positive. It is they are borrowed from external funds. The net cash inflow negative, positive, positive, again positive, and n minus 192 negative. It is not good thing at all. Trend Company Limited is not managing its cash flow efficiently, because it is though making investment, there is a no trend, there is many fluctuations are there. We should not recommend the Trend Limited from this analysis. We have to make deeper analysis for the Trend Limited. Then next, Tata Consultancy Services. Here what we saw, cash flow from operating activity. Here is a good trend. It's increasing their operating activity cash flow in a positive way. It's increasing trend. What we see is 2,54,847 crore after 10 years average. Then cash flow from investing activities all negative till this year, and then after it is positive, then it is negative, and overall it is negative 34,178 at the end. Cash flow from financing activity, it's negative. It means company is repaying its debts, company is paying its interest rate, and company is paying dividend to the investors. It's good to be a negative. That is 2,10,174 crores. And at the net cash flow is 10,494 crores. It's good for Tata Consultancy Services. Now, next we'll move to our next slide. So these are some parameters to analysis the cash flow statement. One of the more important parameter to analysis the cash flow statement is CFO upon PAT ratio. CFO, what is mean by CFO? Cash flow from operating activities. It's very important from the company's point of view. Cash flow from operating activities upon profit after tax. CFO upon PAT ratio should be greater than 1. If you want to invest in the company, first check what is the CFO upon PAT ratio of the company. It should be greater than 1. What CFO upon PAT ratio shows us? It shows how much part of the profit of the company is able to convert into cash to manage its working capital requirement. We'll see the DMAT CFO upon PAT ratio, and we'll come to know how the DMAT converts its actual profit into the cash. If a company's CFO upon PAT ratio is greater than 1, then the company is managing its working capital requirement very nicely, and because CFO or company is converting its profit into cash very efficiently. If CFO exceed the net income, then it is considered that company can convert its accrual earning. Sorry, we are following accrual system of accounting, so company can convert its accrual earning into cash. It's very important. Our debtors and receivables, there should not be a big amount for debtors and receivables in the balance sheet. So company has to convert its accrual earning into cash, else it has a poor cash flow management. So for this, we'll take a practical example. For this, I'm using a ticker phenology app. Here we'll see the CFO and PAT ratio of DMAT first, then we'll take a HUL company, Hindustan Unilever company. See, I'm using the ticker app, ticker phenology. See, I will type the DMAT. Avenue Supermart. I will check the CFO ratio here. CFO upon PAT ratio is 0.99. It's less than 1. So company is doing well, but not so well. It will take time because DMart is investing more in their property, plants and equipments, and more money is stuck in the stock. So company CFO upon PAT ratio is less than 1. The next company will see HUL. Hindustan Unilever. See, we'll check the CFO ratio. CFO upon PAT ratio. What is that? 1.03. It's good. So we'll see its cash flow also. What the trend is. See, net cash flow is negative, but CFO upon PAT is greater than 1. When we come to know it is the negative cash flow, it's a bad thing about the company. But what company is doing, operating cash flow is in trending, increasing day by one, yearly. There is an increasing trend in operating cash flow. Companies investing, and and companies investing, companies receiving, companies investing, companies here, companies paying its debt, companies paying dividend. So it's good thing. Companies cash from financing activities negative, and net cash flow here, though it is negative, company CFO upon PAT ratio matlab actual profit companies converting into cash is good. Companies making its working capital management very efficiently, that CFO upon PAT ratio shows us. Now, go to next slide. So we'll do, you all knows these two companies, Safari Industries. This is a B2C companies. It is suitcase making company, and its peer company VIP Industries. We'll make the peer comparison. These are to the peer companies. We'll make the comparison by using ticker phonology again. Safari Industries. Safari Industries. We'll see first cash flow from Safari Industries, how it is trending. Cash flow, it's negative, then again positive, then it's decreasing, and again increasing. Investing, not good. Investing, negative. It's fluctuating. Financing, positive, negative. At the end, poor cash flow, 0.28. Then we'll check its ratio. What is its ratio? It is 1.12. CFO upon PAT ratio is 1.10, which is good, na? CFO upon PAT ratio. Matlab, company ka working capital management is good. Company is making profit from the companies, all the profits are realized in the cash. That is ratio is 1.12. Though company is having a negative, company is having a poor cash flow. Now we'll check with the, which company is this? Is peer company, Safari, and its peer companies VIP Industries. We'll check the cash flow statement of VIP Industries. Here, cash flow statement of VIP Industries, what we are showing. It's negative, positive. There is no trend at all. Investing is, there is no trend at all. Fluctuating trend. Financing, see these all. Net cash flow is 14.83. Its ratio, we'll see. 0.93. It's less than 1. See, these are the two companies, but scenarios are different for the two companies. That means VIP industry is not making its working capital management efficiently as compared to Safari Industries. It's having 1.03 something CFO upon PAT ratio. So we can analysis these peer companies with this CFO upon PAT ratio. For this, we can. There are lots of apps to analysis or make the analysis of the cash flow statement. Now we'll go to our next slide. L&T company, Larsen and Torbo. It is a really, it is an infrastructure based company. I want to share something that CFO upon PAT ratio is not applicable in case of infrastructure company, real estate company, banking and NBFC companies, because upfront cash realization is not possible due to long-term projects. Because these real estate companies or banking companies, cash is not realized on upfront basis. They have lots of long-term projects. So it's not possible for these companies to realization of cash is not possible at early stage. So CFO upon PAT ratio is not applicable for these type of companies. So excluding these types of company, we can go for CFO upon PAT ratio analysis to other companies. So we'll do L&T company, Larsen and Torbro. What we see the ratio, that is 0.79, very poor ratio. Because I said earlier, These are the infrastructure company. So CFO upon PAT ratio is not applicable to these types of company. See their cash flow. Cash flow from operating activities positive, cash flow from investing activities negative, cash flow from financing activities negative, and net cash flow is negative because these are real estate companies. Their money is stuck in the company's long-term projects, so they have negative cash flow. We have to make peer comparison and we can make the analysis of these types of companies. Now, thumb rules to analysis. See, when we see basic thumb rules, what we see that except all real estate companies and financial companies, all companies CFO upon PAT ratio we should analysis and it should be greater than 1 at least. Then next, net cash flow from operating activities are preferably be positive in cash flow statement. See, if you are investing in that company, the operating activities cash flow should be positive because company's core purpose is to bring cash in to the company. So it must be a positive. Next, net cash flow from investing activities could be a negative, and it's okay to be a negative because it means company is pushing cash outwards investment, which will help company to grow further. We saw the DMart is making more investments. It's good because they are seeing the future perspective. It is good for the company. The net cash flow from financing activities could be a negative or could be a positive. It's good to be a negative because it shows your company's paying capacity, repaying capacity to the loaner, or paying dividend back to the shareholders. If financing activity is positive, then company is borrowing funds from the outsider because company cannot manage its fund requirements from cash flow from operating activity. So these are fundamental rules I made for this cash flow statement analysis. These are the thumb rules I shared. CF upon PAT should be greater. Net cash flow from operating activity should be positive. Net cash flow from investing activity could be negative. And net cash flow from financing activity should be negative. Okay, clear? Next, bottom line. What is the bottom line of this cash flow statement? Even if the business uses accrual accounting as its main reporting system, the cash flow statement is focused on only cash accounting. The cash flow statement enables the managers, analysts, and investor to assess how the company is doing. The amount of cash from operation indicates the internal solvency level of the company and is regarded as the key indicator of the extent to which the operation of the enterprise have generated sufficient cash flow to maintain its operating capability of the enterprise for paying dividend, making new investment, and repaying loan without recourse to external source of financing. How companies managing its funds. Company should pay the dividend, company should make the new investment, company should pay or its loan, but without taking external borrowings. It's company's ability. Repaying of loans from operation rather than investing or financing. If company is paying loans from, repaying of loans from its operation only rather than from financing. This is the bottom line of this cash flow statement. Now, next, what are the limitations of cash flow statement? When there are advantages and uses of cash flow statement, there are also some limitations of cash flow statement also. It fails to present net income. Net income we cannot predict from cash flow statement. We have to follow accrual system of accounting and we have to take the net income from profit as loss or income statement only. Fails to assess the liquidity and solvency position. Exactly. It represents only cash position at the end of the period. It only helps how much amount of obligation can be met. That is, cash flow statement does not represent the real liquidity position. Okay. Neither substitute fund flow statement or nor income statement. Not only on the basis of cash flow statement, we cannot analysis the company. We need income statement also. So it cannot substitute the fund flow statement or income statement. not to assess profitability. Yes, it's super clear because we are following accrual basis of accounting. It neither consider cost nor revenue. It only considers what comes in, what goes out from the company on the basis of cash. It does not conform with the Companies Act because Companies Act, the provision which are made by the Companies Act are in conformity with the profit and loss account and balance sheet and are not conforming with the cash flow statement which are prepared by AS3. It does not assess future cash flow. Future cash flow is not possible to assess by just making the analysis of cash flow statement. Since cash flow statement is prepared on the basis of historical cost, as such, it does not help us to know the projected cash flow of the business. These are some limitations. Now, what are the key takeaways from these slides? In day 7, statement of cash flow form an integral part of financial statement for each period for which financial statements are presented. That is annual period as well as interim reporting period. A cash flow statement provides data regarding all cash inflows that company receives from its ongoing operations and external investment sources. The cash flow statement includes cash made by the business through operations, investment, and financing, the sum of which is called net cash flow. Seasonal business have different cash flow at different time, so we can compare their cash flow with other companies. We can't compare their cash flow with other companies' cash flow. See, there are some industries which are only active in seasonal basis. So their cash flow can't be compared with other companies because there is no comparison of seasonal business. We can compare with their peer industries. Next. See, my favorite slide is coming. Cash is king. Agree? Cash is king. But when it comes to investing, cash flow is king. What is free cash flow? What is free cash flow? Free cash flow is cash from operating activities minus capital expenditure. Cash from operating activities minus capital expenditure. What we get from the operating activities less capital expenditure in form of land, property, building, equipment. Then we'll receive the free cash flow. Excess operating cash of a company generate after accounting for a capital expenditure such as buying property, building, land, and equipment. It is a cash flow available to the company to repay its creditor, pay the dividend and interest to the investors. See, before the cash flow which is available to the company from cash flow from operating activities minus capex, that is capital expenditure. This is free cash flow and which is available to pay its dividend to the investors or to pay the creditors. This is free cash flow. Warren Buffett calls it owner's income. Free cash flow is owner's income and it is popularized it for a stock analysis. Warren Buffett Warren Buffett says ki we have to first calculate the free cash flow of the company to make the analysis of the cash flow statement. And from the point of view of stock analysis, Warren Buffett says you should analysis free cash flow of the company. So here I finished with my presentation. That's all from my side. Now we'll check the questions. Pinky ma'am?
Hello, yes. So now is the question answer question. Pooja, can you read the questions or Nilasha, can you read the question and give the answers? Okay, in chat box there are questions. Okay. In Q&A and in chat box in both there are questions.
One question is there, how's the operating cash is invested back in business? From Anand.
1 minute. Pardon?
how this operating cash is invested back in business?
Operating cash is invested back in the business. It comes under investment, cash flow from investing activities. See, we saw the example of DMart right now, na? Cash flow from operating activities invested in their plant, property, purchasing plant, property and investment. So it comes under the cash flow from investment activity. Next.
Another question is, cash includes bank balance also?
Yes, cash and cash equivalent also include bank balance.
क्या है इधर इंटरनेट का प्रॉब्लम है क्या?
See, here I saw the question. What is the impact on cash flow statement in case of purchase of subsidiary during the year? It is cash flow from investment activities. Cash flow is going out of the business. So it comes under the cash flow from investment activity. We are purchasing the subsidiary. We can see that we are purchasing the subsidiary in form of issuing them equity, then it will not come. And if we are purchasing the subsidiary by paying cash, then it will come, of course, in investment activities. The next question I saw that classification of interest and dividend paid and received in the statement of cash flow. So I earlier also explained interest paid from the point of view of banking company, it is come under the operating activity. Hello? Interest paid or received in case of
सुषमा जी आप म्यूट करो ना अपने आप को सुषमा जी.
Interest paid or received from the point of bank or financial institution, it is come under the cash flow from operating activity. And interest paid for other institution, it is come under the cash flow from financing activity. And interest received, it comes under the cash flow from investing activities. And dividend paid, it comes under the cash flow from financial activity. And dividend received, it comes under the cash flow from investing activity. What is the bank charges classified in the cash flow statement? See, bank charges are under the operating cash flow. How should we assess cash flow from auditing point of view? How should we assess cash flow statement from auditing point of view? Auditing point of view, we should assess cash flow, whether the cash flow from these three sources are genuine, with supporting with all the documents. We saw the case of this scam where there are fake statements are there for increasing the sales revenue. Fake employees records are made for making withdraw the salary. So from auditor's point of view, we have to just analysis all the vouchers, whether all the figures are genuine or not. That also includes other income. While cash flow won't, does this ratio gives fair comparison? Yes. It comes under the cash flow from operating activities, no? Please share an easy way to tally cash flow statement. Use indirect method. You can make reconciliation if it is not tallying. All the extraordinary items or all the non-cash transactions should be reflected in notes to accounts. So bank charges will be a part of operating cash flow, but in financial, will we show it under a finance cost or other expenses? No, 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 no. Bank loan we are showing, or bank interest we are showing under the financial activity, but bank charges are related to, they are normal part of our business operating activity. So bank charges will definitely come under the part of operating cash flow statement. How a lending bank does cash flow statement analysis? Lending bank does cash flow statement analysis. See, cash flow of lending bank is, they more concentrate on cash flow from operating activities. Whether they are getting their interest, whether they are receiving their principal amounts, or they are getting the interest from the borrowers. They will analyze their statements where there are overdues or NPAs in the balance sheet. It's super clear. How to consider accrued interest on the investment in FD? This is not a part of cash flow statement. Accrued interest is not a part of cash flow statement. It comes under notes to account. Ticker side, you just type ticker phenology. You just type ticker phenology and go to Google and just type ticker phenology. You get the site. Profile on sale of security showing cash flow. I didn't get it. Profile on
Profit.
uh,
It written profit on sale of security.
profit on sale of securities, cash flow from investing activity. They are selling the security. Okay.
I think very number of questions are been answered. So we can conclude the session for today.
Yeah, Pooja, please give a formal vote of thanks.
Okay. Good evening, friends. Myself, CA Pooja Mrarka. I would like to give a formal vote of thanks on behalf of Women and Young Women Member Committee. I would like to say very much thank you to our today's speaker, Nilasha ma'am, who has taken her precious time and given us enlightened us with the cash flow statement, quick revision on AS Accounting Standard 3. The ma'am have very much rightly said, cash is king. Truly cash is king. जिसके पास आज कैश है वही मार्केट में है, either or business or industry or anywhere. Then I would like to thank our WRC chairman C. Arpit Kabra sir for giving us his time. All my patient listeners who have taken the time and were a wonderful audience, put forward many more questions which helped others also to get the benefits of. Once again, I thank everyone for being the participant of today's evening seminar. Thank you everyone.
Thank you, Pooja. And thank you,
Sushma.
Nilasha.
Thank you, Preeti. Thank you, Preeti, Pinky ma'am. Thank you so much.
Thank you, ma'am.
Yeah.
Thank you.
So we can close the session. And for PPT, Nilasha, can you share with the participant because they are asking about the PPT? If you can share.
Okay, I will share with the WRC email.
Yeah. Okay. So we will upload on our website, so you or anybody
Yes,
can
of
download.
course.
Yeah.
It's privilege.
Yeah.
I will share.
Thank you. Yeah.
Thank you so
Thank
much,
you,
ma'am.
Nilasha.
Thank you.